little mend, but inflation is showing no signs of cooling down. Industrial output in the month of May is back in the positive territory. The growth rate of 1.2% was slightly higher than our estimates and much higher than the contraction in April. On the other hand, inflation remains stubbornly closer to the 6% range. The main culprit is the rising vegetable prices. Ekta Batra is here to wrap up the numbers. Ekta?
Well, I'll start with the June CPI data, which came in at around 5.77% versus 5.76% on a month-on-month basis. So it was largely in line with expectations. Our expectations were around 5.75%, with core CPI coming in at around 4.5%, which compares to 4.7% on a month-on-month basis. Now, the reason that we saw the flatness possibly come in was because of a base impact. But if you look into the internals of the CPI data, food inflation continued to rise on a month-on-month basis. Previous month, it stood at 7.5%. It's risen to around 7.79% for the month of June, and that is led by the rising vegetable prices that we've seen. It was 5% in the month of April, rose to over 10% in the month of May, and now has risen to levels of around 14.7% for the month of June. Though economists are saying that it's possibly transient in nature, nonetheless, that was one of the key factors to watch out for in terms of a trend going forward as well. Separately, the positives were the pulses prices. In fact, the inflation rate for pulses decelerated for another month. So remember that in the previous month, for month of May, on a month-on-month basis, it was down over 250 basis points. It fell to around 26.86 versus 31.57% on a month-on-month basis. So that was a positive which came through. And separately, we had the likes of miscellaneous inflation as well as fuel inflation, which softened on a month-on-month basis. Separately, for the May IIP data, it was really a tad better than expectations. It was a positive data that we saw after a month of contraction, but remember that the volatility in the data does continue for IIP. What stood out was manufacturing sector output was positive at 0.7% versus a 3.1% decline. Remember that after in the previous 6 months, it's declined for 5 months and only grown for around 1 odd month. So this would be a positive piece of data which is coming from manufacturing. Separately, electricity was expected to slow, so that continued to slow. One of the key factors which has been declining is consumer non-durables. The contraction reduced consumer non-durables, so it will be important to see whether it does in fact turn into the green anytime soon. It was a decline of around 2.2%, and separately capital goods continued the volatility that we've seen, so it was a contraction but lesser as compared to the previous months that we've seen, down 25% for April, and for May it was down around 12.4%. So IIP not so important according to economists compared to the CPI data for the month of June.